So you're thinking about investing in Toronto real estate, and in this market, multiplexes are probably on your radar. But within Toronto multiplexes, what should you go for? A turnkey option, a triplex conversion, adding a backyard house, or even going for a fourplex plus ADU? Well, let's walk through the different options and what's been working for our clients lately in 2025 so that you can decide what fits your situation best. But before we jump in, do us a favor, please. Hit that like button, subscribe for more real estate investing tips, and book a call with us if you want to chat one-on-one. Let's kick things off with the turnkey option. If you're someone who wants to just keep things simple and avoid renovations, a turnkey multiplex is probably going to be your best bet. These are properties that are already set up for you to start renting out and cash flowing right away. For example, you can pick up a triplex in Toronto these days for around $1.2 million because we are in a softer market. With a 20% down payment and closing costs, you're looking at around $300,000 upfront in capital. Once it's rented, these properties can give you pretty solid positive cash flow. Now, if you are working with a smaller budget, there are also cheaper turnkey options closer to $1 million, but in these cases, you're probably looking at 2 units. So here, cash flows would be less, closer to break even, but the advantage here is that you are still getting that hands-off, low maintenance setup that is still pretty easy to carry. Now, turnkey properties are the easiest to buy and usually need the least amount of money up front. You'll make money here over time from rent and long-term appreciation, but do not expect a big jump in property values right away since you are paying for improvements that someone else had already made. If you do want to level up and add more value, a simple triplex conversion is a great option. For example, one of our clients recently just bought a semi in Toronto for around $1.1 million, is spending $60,000 on renovations, and the property, based on market comps, will be worth around $1.25 million. You would need over $300,000 to cover the down payment, closing costs, and fund the renovations in cash, but after everything is done, you are looking at around a $100,000 increase in property value. So once this happens, not only will your property cash flow very well, but if you do want to take it further, you can combine some extra savings with a refinance to pull out about $140,000. And with that money, you can move forward with step 2 of this project with building a backyard house, adding even more value and increasing cash flow even further. And then we have our 4+1 properties in Toronto that's been getting a lot of attention lately. Basically, you'll create a fourplex in the main house and then add that ADU accessory dwelling unit in the back, giving you 5 units in total at the end. And once you hit 5, you can then qualify for a commercial mortgage, which ends up having its ups and downs. One plus is that refinancing can be more predictable since you're refinancing based on a value calculated with math using something we call a cap rate, basically your net rent yield, or a percentage of your construction costs. But there is a trade-off. You cannot get commercial financing until you have converted to 5 units, so you're left needing to figure out how to finance the construction costs here on your own. Also, the refinancing terms, whether you can refinance against your completion value or total cost, is up in the air lately with CMHC's MLI and MLI Select commercial mortgage. So if you can only pull out a percentage of your total cost, not your total value, you might not be able to cash out as much as you would with a residential mortgage, which is typically based on market value. The big advantage of going commercial, though, is that you are qualifying based on your property's rental income, not your personal income, and it won't show up on your personal credit report. So in our opinion, this option really just makes the most sense if you are looking to scale aggressively. Now let's look a little bit more closely at the 4+1 conversions. When you do this, you're likely skipping that midway refinance that we would be doing with the 3+1 to speed up the process for the commercial loan refinance. So what that means is that you will need cash to cover both the main house and the ADU build. And on top of that, you'll have to find a bigger house with a bigger purchase price that can be split into 4 units while meeting all the necessary code requirements like proper HVAC and exits. So compared to a 3+1, you'll actually need a lot more capital up front. But when you compare the cash out and capital requirements to the simpler 3+1 option, the two are actually not too far off. And then there's the 4+1 top-up, where you might be adding 2 extra floors to a bungalow to create more space and rental income to make a 4+1. At this stage, you're basically stepping into developer territory. It's the most capital-intensive option, a much bigger project, much longer project, and comes with a lot more risk. It's true on paper the returns might look amazing, but in reality, the return on capital isn't that much better than a 3+1 or a 4+1 conversion, if you can keep construction costs around $250 per square foot, which is what we base this on. Now, if you're not experienced in construction and you have to hire out and your construction costs creep up to $400 per square foot or even more, the numbers just don't work. So, in our opinion, 4+1s really only work for investors looking to scale aggressively, have the capital access and construction experience to handle it. And once we break down the numbers, many mom and pop investors actually end up shifting back to the 3+1s. It's a lot easier to manage, they need a lot less capital, and carry a lot less risk. Now let's just step back for a little bit and look at the bigger picture. And you've probably noticed that our investment strategies in Toronto have been leaning more and more so towards higher cash flows and more value add. And there is good reason for this. Our economy is weak, trade tensions are rising, and interest rates are all over the place. Betting on property prices right now is probably not the best move. BMO, for example, originally expected just 2 more rate cuts in 2025, but now they're calling for 6, totaling a 150 basis point drop. And while you might think rates falling quickly could mean a faster price rebound on real estate, the reality is pretty different. A weak dollar, job losses, and softer rental demand could make things actually a lot tougher. So instead of speculating, we are going back to the fundamentals of real estate investing. Stronger focus on rental income, positive cash flow, and a better balance of rental income and long-term appreciation for steady, reliable returns. And if you want to maximize your returns, value-add projects are where the real opportunities are right now. Governments are making it easier to add units, permit approvals are getting faster, development charges are being waived, and there are just a lot more financing options lately too. This can mean that you can lower your construction costs, increasing your total returns, and most importantly, put you in control of your returns. I know this is a lot of information, so if you're still not sure what exact strategy makes the most sense for you, we're happy to chat. We're not just a regular real estate sales brokerage. We're investors too, with deep experience in making informed, calculated decisions when it comes to Toronto multiplex investing and value-add projects. Whether you're looking for a turnkey property or something that you can convert into multiple units, we're here to help you figure out the best move. Here's what it's like to work with us. We'll take the time to understand your goals, run the numbers to find the best investment opportunities, and eventually help you land the right one for you. If renovations are part of your plan, we'll connect you with trusted contractors and guide you through the process. And once everything is done, we can help with leasing and property management too. Are you ready to get started? Just head over to this link here and let's chat.